Somewhere in a federal computer, right now, there is a file with your name on it and money inside it that is already yours. Not a grant, not a handout. Money you earned or overpaid, sitting there waiting. And the only thing between you and it is one piece of paper, a single form that nobody from the government will ever mail you, because the moment you file it, they have to pay. Today I am handing you 5 of those forms, by name and by number, so you can write them down. If you were born before 1960, or you are over 65 and you collect a pension or Social Security, at least one of these is holding your money right now. And the last form on this list is the biggest. For some couples, it is worth more than $5,000 a year, every year, and almost none of them have ever heard its name. So stay with me. That one is worth the wait. Now let me be straight with you the way most of these videos are not. This is not secret money. It is not a windfall, and I am not sending you to a hotline for free cash. Every one of these is your own money, your wages, your contributions, your premiums. The government is just holding it or taking too much of it until you file the form that releases it. And here is what makes these 5 different. They are federal forms. They work in all 50 states, and most have no income limit at all. So this is not for one state and not only for low-income people. If you are over 65, this one is yours. Form number 1 is the one almost everybody gets wrong, and correcting it costs you nothing. When you set up a regular payment from a pension or an IRA, they hold back a piece for taxes first. That part is normal. The problem is the default. The standard withholding on retirement income is a conservative guess, and it almost always runs high. It ignores the bigger deduction you get as a senior. So every month they take more than you will owe, then hand it back the next April and call it a refund. Understand what that really is. It is your own money, loaned to the government all year at 0 interest. A refund just means you overpaid. The fix is a form called W-4P, the Withholding Certificate for Periodic Pension or Annuity Payments, free at IRS.gov. You fill it out, hand it to whoever pays your pension or runs your IRA, and set the withholding to match what you actually owe. No income limit, no age limit. The very next payment is closer to right, and the money stays in your account instead of theirs. That keeps your own money in your hands all year. The next one is the one I see people get backwards more than any other, and fixing it can be worth around $2,000 a year. Form number 2 is about your Social Security check, and it runs in 2 directions, which is exactly why people get it wrong. Here is what nobody tells you. Social Security comes with no tax taken out by default, 0. If it is most of your income, that is fine, because little of it is taxable. But if you have a pension or IRA withdrawals on top, part of it becomes taxable. And with nothing withheld, you get a surprise bill in April, sometimes a penalty. So some people do need withholding turned on. But here is the part that should make you sit up. A huge number of seniors have the opposite problem and never notice. Years ago, when you earned more, you may have set your Social Security withholding to the top rate, 22%. Now you are retired, your income is lower, and 22% is far more than you owe. So every month the government quietly skims hundreds of dollars you will only get back a year later. Most people have this exact thing backwards. They are not under-withheld. They are badly over-withheld. The form is W-4V, the Voluntary Withholding Request, 1 page at IRS.gov. It gives you 4 choices, 7, 10, 12, or 22%. If you get a big refund on your Social Security every year, you are over-withholding, and dialing it down to 7 or 10% can put roughly $2,000 a year back in your pocket, month by month. No income limit here either. Just be honest about your numbers, and if you are not sure how much of your Social Security is taxable, ask a tax preparer. If those first 2 were new to you, do 2 quick things for me. Hit subscribe and tap the bell, because these forms and these numbers change every year, and nobody from the government will call to tell you when. That is 2 down. The next one is not a trick or a loophole. It is a form they built for you, and most seniors never use it. Form number 3 is not about getting a check. It is about not handing over money you never owed. It is the tax return itself, and there is a version made for you. It is the 1040 SR. the U.S. tax return for seniors, and it has existed since 2019. Same return as the regular 1040 with one difference. It is built for people 65 and up. The print is bigger, and it lays the extra senior deductions right on the front, instead of burying them where they are easy to miss. And those deductions stack. You get the standard deduction everybody gets. Then, because you are 65 or older, an extra one on top. And under the latest tax law, there is now an additional bonus deduction for seniors for the next few years that phases out at higher incomes. Together, that can shield thousands of dollars from tax. This is not a loophole. It is the deduction the law already gives you. The only mistake is not taking it. So here is your one action. If someone prepares your taxes, ask one question. Are you filing me on the 1040 SR? And am I getting every senior deduction? If you file your own with software, make sure it knows you are 65 or older, because that one checkbox turns the extra deductions on. The form is free at irs.gov, no income limit. The bonus piece does phase out at higher income, so if you are near that line, have a tax pro run your numbers. Form number 4 can cost you the most if you skip it, because skipping it can mean paying tax twice on the very same dollars. Here is how. Some of the money in a traditional IRA went in after it was already taxed. That is your basis, and the IRS has no right to tax it again. But the government does not track it for you. One form proves it, the 8606, the non-deductible IRS form at irs.gov. Skip it, and years later when you pull that money out, the system treats every dollar as if it were never taxed, and you can pay full tax on it a second time. And this is not small money. $30,000 to $40,000 of untracked basis, taxed again at a normal rate, can cost $6,000 to $9,000 on money that was already yours. That form also matters if anyone ever told you to do a backdoor Roth. If that is you, and you think your basis was never tracked, that is a real conversation for an accountant, because past years can sometimes be fixed. So that is 4. Now the one I told you to wait for, because for many couples it can beat all the others combined, and the window to use it is short. Form number 5 has the biggest dollars on it, and it comes down to a quiet Medicare rule that punishes you for a year. You will never live again. Here is the rule. What you pay for Medicare is not the same for everyone. In 2026, the standard Part B premium is about $203 a month. But if your income is above a line, Medicare adds a surcharge on top, and that surcharge has a name. It is called IRMAA. And here is the trap. Medicare sets it using your tax return from 2 years earlier. So your 2026 premium is based on your income from 2024. Think about that if you just retired. 2 years ago, you were still working a full paycheck. That is the income Medicare is looking at, so they charge a high earner's surcharge on money you no longer make. That surcharge is not pocket change. At the first tier, it adds about $284 a month on top of the standard premium for each person. For a couple where both were high earners, that is over $560 a month, close to $7,000 a year, charged on income from a job you already left. At the top tier, it passes $680 a month each. But there is a release valve, and it is one form. The SSA 44, the Medicare Life-Changing Event Form, free at ssa.gov, retiring or cutting your hours, is one of 8 life-changing events the government officially recognizes. You file it, check the box for work stoppage, show your real current income, and Medicare recalculates your premium on what you make now, not 2 years ago. For a couple coming off working incomes, that reduction can be worth more than $5,000 a year. Most people have never heard of it, so they pay the surcharge in silence. Now let me be honest about who this helps. It helps most if your income dropped because you stopped working or cut back. If your income 2 years ago was already below that line, the surcharge never applied to you, and there is nothing to fix. But if you retired in the last couple of years and you are paying that surcharge on your old salary, this is how you stop. Do not wait for Medicare to notice, because they will not. Corrections take a billing cycle or 2, so file it soon. So here are all 5 in your hands at once, because this is the part to screenshot. 5 federal forms, All 50 states, most with no income limit, everyone holding money that is already yours. Number 1, W4P, to fix the withholding on your pension and IRA so you stop loaning the government your money for free. Number 2, W4V, to set your Social Security withholding where it belongs, 7, 10, 12, or 22%. Number 3, the 1040SR, the senior return, to claim every deduction your age allows. Number 4, the 8606, to prove your IRA basis so you never pay tax on the same dollars twice. And number 5, the SSA 44, to cut that Medicare surcharge after you retire. 4 of these have no income limit at all, and everyone lives free at irs.gov or ssa.gov. None of these are secret, and none are tricks. They sit in plain sight on the government's own websites. You never heard the numbers because nobody's job is to call and read them to you. The default favors the government holding your money. The only thing that changes that is you filing the form. So pick the one that fits you. And if this helped you, do one thing. Send it to one person over 65 you care about, a spouse, a sibling, a friend, anyone on a fixed income who could be loaning the government money or paying tax twice and never know there is a form that stops it. You might be the only one who tells them, and one of these forms could put thousands back in their pocket this year. And here is the natural next step. These 5 forms are about money the government holds until you ask. But many of you are owed another kind, when Social Security itself has quietly underpaid you for years because of a mistake in your record. I made a whole video on how to check and fix that, and it is right there on the screen. Watch it next. Take care of yourselves, and take care of what you worked so hard to build. I will see you in the next one.